Good morning. This is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Here we are entering the second month of December, and the equity markets continue to melt up. The Dow is right below the 18,000 mark, so we're waiting to see if it can get over that area. Thus far, the market looks pretty good. I mean, there has not been any signs of any great institutional selling or distribution, as we call it in the market, as the markets move higher. So the NASDAQ, as long as it holds that $4,700 area, we're probably in pretty good shape. On the S&P, if it holds the 2050 area, we're in still pretty good shape. Interesting thing happened since the October 15th bottom is that the small caps were the first ones that kind of really started to move, the initial of that move. They were the first ones to correct and the first ones that started to move. However, they kind of stalled out. So if you look at the Russell 2000, I'd look to see if it can break past that at 1183. That would tell you that small caps may be in play, but so far they're getting beat out by the large cap, the mega caps. If you look at the NASDAQ 100, it's the best performing index since that bottom, followed by the NASDAQ, then followed by S&P 500. So the small caps are still lagging. Now, if you look at the various sectors, we keep coming back to the same sectors that are leading. It's medical, it's semiconductors, it's some retail, select retail. Transports have just run away, the airlines and the trucking stocks. Rails have corrected a little bit with crude oil taking a hit. So I want to talk a little bit more about some of the medical stocks, because that sector is just exploding across the board. Now, before I've talked about the big cap biotech stocks that are leading this market, stocks like Celgene, Regeneron, stocks like Biogen that's trying to break out of a new base. Gilead also looked like it might have bottomed around that $100 level, moving up. And all these are solid companies making some very good money, a lot of drugs in the pipeline. Now, what I want to talk about is three small biotech stocks that have no earnings. So this is extremely risky, so you should consult your financial advisor if any of these trades are for you. And also be aware of if these companies don't get their drugs approved, you could take a big hit to the tune of 50%. So first off, a stock I talked about previously, maybe about a year ago, is Acadia Pharmaceutics. They basically, the symbol is ACAD, and basically they make a drug for psychosis for patients with Parkinson's disease, and they're in phase 3 trial. They did get a breakthrough therapy designation from the FDA. The drug's still not approved, but once they do submit for approval, that breakthrough therapy designation means the FDA will take a little bit quicker look at it and review on it. Now the drug also, there's no competitor for this drug, the way it acts. It's also believed that this drug can be used for psychosis in Alzheimer patients and possibly also in schizophrenics. So some good data on the Parkinson's patients in phase 3, phase 2 data on the Alzheimer and schizophrenic patients for their psychosis. So now ACAD, you want to buy somewhere between the 29, 30 and a half area. This morning it's a little bit extended past that. It's above 31 now, but if it comes in somewhere there, that's the time you might want to take a look at it. Now another drug is ZS Pharma. The symbol is ZSPH. They have a drug for hyperkalemia. Hyperkalemia is a very, very dangerous situation when it presents itself in the emergency room. Not much can be done about it. However, they're still quite a whiles away from getting approval. They're in a phase 3 trial, and they actually do have one competitor, Relipsa, that's RLYP, that's a bit ahead of them, probably by about 6 months in terms of getting an FDA approval. However, it is believed that the ZS Pharma's drug, it's called ZS9 at this time, is much more quicker acting, so it'd be a lot more beneficial to patients in the emergency room. So that's another drug to take a look at. You might want to try to pick them up if it comes back to the 43 area. It's a little bit extended past that. And lastly, there's another small biotech stock called Optotec. The symbol is OPHT. And basically they make a drug, Fulvista, that's in phase 3 trials as well. And it's used in conjunction, it's for wet macular degeneration. It's used in conjunction with Regeneron's Eylea, or another drug company's Lucentis, in combination. And also some very favorable results. They're getting milestone payments from Novartis. The deal's worth about $130 million. Now they're breaking out right now. They're in a buy range right between $44 to $46 area. So you might want to take a look at that. So all these drugs, they basically have good data out of phase 2, phase 3 trials, not unapproved. So again, they're very dangerous. Sometimes it's okay, depending on your risk level. consult your financial advisor if this trade's for you. So as always, let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago.